Welcome to the Euro trade, everyone. My name is Marcus D. I've been trading for 18 years, and 13 years out of that I've been a prop trader for various prop firms. Alright, let's see what we have this morning. I haven't done all the nice little levels here, so maybe we can go through that process. I'm going to stay on a combine today because I am setting up my brand new computer, and we actually had a power outage which messed up certain things on this little laptop, so I'm waiting for a new charger to arrive. I did manage to charge it through like this battery, and hopefully it will hold, but I really need to sort out the office. I'm also really annoyed about this stupid camera on the laptop, so I'm going to get my little Sony Alpha thingy back in action. So yeah, otherwise I'm just working with like two screens and it's just not enough, so not with everything that we're doing here, so yeah. Alright, so let's have a look at copper. First and foremost, I'm going to map out some of the levels. Okay, so first of all, let's see these options levels. So we have a gamma wall at 472. This is something that I do every morning. So as it stands now, we're not able to hold above the gamma wall. That obviously may change, but anytime it kind of overshoots then comes back through it, it means that area has been reclaimed. And the thing with options is that those are the levels where market makers may adjust inventory, so they're pretty important. Then we have HVL at 470, which was actually there last night as well, or yesterday. What's an HVL? High volume level, where you might experience the flip between positive and negative gamma into negative and positive gamma. So basically from a, let's say, a quieter day into a more volatile day and vice versa. And then further down we have 468 as a GEX2 level. So those are the nearest. So we're gonna leave just those three. They're a bit close together. Whenever I see that, I don't expect a great day right away because you have a lot of areas to get through. And it's not the case of, oh yeah, it won't break through them. It just slows everything down. Now, before we get into anything else, let's have a look at the volume profile as well. So here's the thing. We are sitting in a bit of a high volume area. You can look at this whole zone as either an extended demand, but just by the fact that we stayed here for so long, it might mean that that again it's going to slow down price. So two different concepts are telling me a similar thing. There's a lot of options levels here. There's not much movement. Everything's sort of overlapping. And, you know, if you compare this sort of movement, the one that went from roughly 543, it was much smoother, right? Now, whenever I see that, it means I can still trade, but probably shouldn't aim for massive swings. In fact, we can maybe aim for the top of this range. That would be 484.60. And then maybe all the way to the bottom of the range at 447.75. So right now, not too happy with the way copper is looking this morning. What are the profiles doing? On the profile, we've opened below yesterday's value area for London. and it's within the 1%. And what did they do first? They ran it up and then hit the value low. Now we are seeing the failed auction from that ballpark area. So where is the value low? 4.05. Okay, so let's do this. So I'm just going to put a coordinate because it's easier. And these are just the London specific levels. Once COMEX hits, these are not relevant. You have different types of references. And then value high, 476.50. The next thing that I want to do is to look at the average ranges. Now, the average ranges are kind of a quantitative extremes of where either the session might go to and whether we have enough space during the day to actually do anything with this. At the moment, we have the average session range low for London sitting at 466.70. And I'm going to make that green and dashed just to kind of delineate the area from all the other lines. And to the upside, we have average session range high and the average daily range high pretty much within 10 points of each other. So 476.15 is the average session range high for London, right? Now the 24-hour measure, and let's make that red because it means that at that point it might slow down or reverse entirely. 466.65 is the ADR, 24-hour ADR, average daily range, right? But they're so close together and they're also overlapping the London value high. So if this does decide to go into a long, there could be a value acceptance that rotates all the way up to that zone. But right now, I mean, they're not even able to actually get up to the London value low. So London value, the edges, the outer edges, they can be very good areas for reversals, but then if they break down, that brings us some new information and you can run a special situation play that's called the value acceptance. We saw that yesterday in ES, actually, if you were watching ES. So there was a call resistance gamma wall at 59.50, and I think the value area was somewhere around 59.30 or something. And then they went into value acceptance and pretty much kept going. There was a put support area at 59.30 that got touched and then they carried on. And then we have NVIDIA earnings and that brought it back way over that, pumping some additional volatility and volume into the market. But what happens today, nobody knows. So we're going to see what they want to do with equities today. Let's go back to our little corporate trade here. All right, so those are just the basic levels that we have at the moment. Obviously, there's other levels further down, like there's GEX1 at 465, there's GEX2 at 462, and there's the big put support area at 460. So until it decides exactly where it wants to go, these levels are what we're working with. Now the initial balance did have an extension, so they tried to go up to the London value low, failed, and at the moment they're kind of trying to go into into a failed auction. Now let me just map this out. How big is that? So the initial balance size is a little bit bigger than normal. It's 86. So let's put it in red. There it is. And let's drop down to, let's say, a 5-minute chart just to see how that looks on a more granular level. Now I use the ATR also as a measure for timing trades a little bit better. And whenever something falls below or outside of that measure, you can say that it fell too far and therefore you need to wait for a little bit of a pullback. So the failed auction that happened, it had a decent amount of volume in it. And it went below the gamma wall. So it's likely that this is a true failed auction, but because of the size of the 30-minute candle that fell, it overshot the ATR for whatever we have currently over the last 9 candles. It overshot it by quite a few points. So I would like to see a bit of a pullback. And what I like to do is to then fish for some lower time frame, newly formed supply areas. So basically where we've seen the sell-off come from, that becomes like a resistance zone. And I can see one at 472.65. So ideally I want to see a pullback up to that area and then maybe run a short into the value acceptance. Why do I keep saying value acceptance? Into the failed auction, full rotation through the initial balance. We have Globex VWAP cutting through the initial balance, so maybe that can be a rough target. So we'll see whether we can get that. That will be hyper 1. And because I'm sitting here talking, maybe I can even utilize a limit order. Even though I don't like limit orders myself. But let's say we can do a limit sell for 3. And then the stop loss, should we go above this entire structure and give it some room just in case they want to do like a stop run. And then you have a decent profit margin on the trade that is planned out quite nicely. Still doesn't mean it's going to work, but this sort of a systematic way, methodical way of mapping out levels, getting the full understanding of what could be happening is much better than just sitting down and going, it's moving, I must get in, I must get in. Richard Ray says, you look great on any camera. Thank you, Richard, very kind. I do try to make myself presentable, but I'm not exactly a morning person, so, you know, usually if I'm, you know, going on a broadcast a little bit later on, I look a bit more put together, but in the morning I just can't be bothered with my hair. Like, my hair is just little. D3 Matrix, Tom is saying, good morning. D, I'm struggling with patience this month, dealing with a lot in my personal life, and it's negatively impacting my trading. Any suggestions? Well, it's a tough one, right? Because if you have things going on in your personal life, you have 2 choices, right? You can keep trading and maybe size down and just try to push through it, not the best. Or you can just take a little bit of time off and, you know, try and sort out stuff in your personal life before you come back to trading. And, you know, remember, trading is one of the biggest, toughest things that you will ever do in your life. And I don't know about you, but for me, even after all this time, it still takes up a lot of energy. Now, I've chosen products that don't suck that much energy from me, and I've modified my trading style in a way that I can still do other things and still come back to my trades. You know, people criticize me for not doing NASDAQ, but to me, NASDAQ is just like another prison, because you can't hold, unless you're going to use like really large stops or be super diligent with your trade locations, which I will admit at this point I'm not. Okay, full disclosure, because I think I have enough situational awareness to be able to take advantage of almost any situation. Now, is that wrong? Is that right? I don't know, but on most days it works for me at the very least. But at the same time, if you are still, you know, trying to trade products that are very fast moving and you have a lot of crap happening in your personal life, I don't see how I would be able to handle that. Okay, so you know, modifying your trading style is also never an easy thing. It's always like, oh my god, now I have to go back to journaling, even though, you see, I journal nearly every single day, and more so if the day doesn't go right. But even if the day goes well, I will still put down things like, you know, copper behaved as its normal directional self, or, you know, noticing more neutral days happening during London, you know, just like little observations that might help me keep a pulse on what copper is doing and how it's behaving. Julie is asking any thoughts on gold. We can have a look at gold. I haven't looked at it today, but let me quickly. Let me just check whether we are. Oh, we rolled. Okay, we rolled. So and we rolled straight into, I think this is that September Q? I always forget. Let's have a look. GCQ. August. Right. We're jumping over June. Sorry, July. Not too deep. Yeah, we jump over July straight into August. Let's see what the options are doing for that particular contract. Now, whenever gold rolls on the first sort of day, I'm not too keen on trading anything that just rolls. This is why I kind of wait with RBOB and with, to a degree, with crude oil as well, for them to sort themselves out. Because you always have that split volume from the old contract and the new contract, and it just causes a whole bunch of trouble. Okay, so we got some options activity. It's so annoying working on just two screens. And I mean, it doesn't have to be that way for everybody. It's just, you know, I'm running a stream. I have the options chart. I have the profile charts. Then I have OBS. Then I've got Discord. And it's just like, Right, gold has a put support and a gamma wall. Well, that's always great to see. So up at 3,320, all the way up to 3,325. Wouldn't be surprised if we see it all the way back up there. What it does at that point, it's anyone's guess. You know, you can have a case of more people buying puts or more call buying, in which case those two levels might just be like a bit of a speed bump before it carries on higher. I still had that 3,000 level, but on the August contract, that's going to be different. So I'm going to change this chart and then go up to that big time frame. Just to see exactly what we're working with. Alright, so it's not that different. I was expecting it to be like completely different. I do know that before 30, 35 on this chart, like visually, was 3,000 like evens on the old contract. So that's shifted a little bit. Now, even though 3,000 still falls into the same area, we do need to adjust this demand because it's not in the same spot anymore. And now the very low of that area is 3,000. Now, whenever I'm looking at these supply and demand zones on like really large time frames, I don't see that many stop runs on large time frames, probably because you have a lot more trading information in there, so therefore it's more difficult to break them. Whenever I'm looking at a 30-minute, 15-minute chart, you know, anything intraday, and the market structure will look the same, I would actually expect them to run through the low and then to reverse. So basically run through the low, stop run, liquidity grab, however the cool kids are calling it these days, but Granny D is going to call it a stop run because that's what I know it as. And then it goes back into the range to close, you know, at least a 15-minute time frame back into the range. Usually we're like some sort of a wick, and that signifies that your whole price action observation should be that was a stop run, we're back in the range. Maybe there's a mean reversion to be had now. But if they break the low and they hold below it, in this case, that would be a market state change. It would be like a continuation of whatever they started up here. But yeah, so those levels slightly shifted, and the same thing with this supply. So it needs to be a bit higher now. But the outlook's still the same. I still think that 3,000 might be on the cards. But let's just shift that to 30, 32, because that's the edge of that area. And just going to see what we have today. So we have GEX2 at 3,300 for the options levels today. And we have an HVL of lower down at 3290. 3290, okay. 3290. Again, pretty close together. Let's go down to an intraday time frame. And I'm jumping back up to the daily chart to just see what the volume is doing. I mean, the volume is a bit, like, it's diminishing, right? We'll see whether that can come up to this moving average, because I have a little moving average on the volume itself. Whenever we're underneath it, it spells low volume. So if this move is going to have any juice to it, this volume needs to pick up on the short side. Otherwise, we're just going to be in a rollover weirdness. Whole bunch of wicks here, there, and everywhere, and then nothing's going on. Where is gold opening? So now with gold, I do need to change. Some things. GC, because now I'm still in the old contract since I don't really trade gold all that much these days. Okay, opening below value. How far down did it open? Yeah, just over 1%. So it's similar outlook to copper, except it's not even coming close to the value area, which means this is a weaker market at this point. That can change. Gary Van Horn wants to know, what are your thoughts on trading 2 or more instruments simultaneously? If you are a more advanced trader, no problem. I frequently run like at least 2 active positions together concurrently, because I might see a setup, like let's say I might be carrying over a copper trade from London, and that's kind of like either at a break-even point or it's doing pretty well, and then I see natural gas NYMEX opens and something else sets up. But bear in mind, my playbooks are pretty well defined, right? So I won't be going, oh, this is moving, oh, that's moving. Oh. So, I might see a, sustained auction happening from VWAP in copper, but at the same time, I see an opening range trade in natural gas, which can actually work pretty well, which is not the case with crude oil. It used to work in crude oil, so that's changed. But yeah, I don't have any problem with it if you are a more advanced trader. Now, if you don't, if you've been trading for like 2-3 years, that's still new to me. If you haven't been through various market states of low volatility, high volatility, and I'm talking extremes of that. We've seen one part of it, we've seen extreme volatility as a result of Trump tariffs. But I don't think any of you who have been trading in the last 5 years, ever since COVID, have experienced the low volatility, which lasted for years in equities, by the way. When I got into prop trading in 2013, it was just like terrible. It was ES had... Someone's at the door. DEFCON 2 with the dogs whenever there's somebody at the door. Amazon man is not their friend. Alright, so I don't have that much of an issue trading too, but like I said, the low volatility environment is something that many of you haven't experienced yet. So when I started working, ES was moving 12 ticks per day, like literally 3 to 4 points. That was your entire range. So clearly that's not the same as what we have now. And that particular state, like I said, it lasted for years. It actually lasted pretty much, I think it was like 2017, 2018, when I noticed it upticking a bit. And then it had its revival in 2020. But, I see people complaining about the dates that are only like 75 points or, 150 points on NQ, and they're like, oh, this is a really shit day. So what are you going to do if that's like the new norm? Are you just going to complain every day? So, you have to have some sort of a way to scale your stops and stuff. Now, if you have those kind of skills, you can trade 2 things at the same time, but maybe don't trade them from the same asset class, right? So I would never, for example, concurrently run a YM trade, DAX trade, and an ES trade. Why? Because that's triple exposure. You're effectively using the same asset class that is largely correlated with each other on a lot of the days, even if it's not like, 80% correlation, is still going to be very correlated. In fact, if we have a look at, YM and ES side by side, of course I don't have ES, but hold on, shouldn't I have it? Oh no, this is not my live. Okay, yeah. Because on my live I don't pay for ES and NQ, but I do pay for YM. Alright, so what does this look like to you? This is a 30-minute chart. Very similar, right? Minor differences, But for all intents and purposes, look at the last 3 candles. They're like very, very correlated. So if that's what you're thinking of doing, oh, let me run an ES and NQ, don't. Unless you're going to take into account that you're going to size down appropriately. So maybe, let's say you then have to manage your account on an account basis. It's like, what is my maximum position size? Okay, what is my maximum default size on one product that I used to trade? And then you would go, well, if I used to trade, let's say 3 NQs, now I have 2 products. How do I partial that? Well, maybe trade 1 on ES, 1 on NQ. And then even if you get smacked in the face, it's still going to be like the risk model is not going to be massively different, because even though you've double exposed yourself, it's still within the risk limits of whatever you assign for yourself. But again, if you don't have well-defined playbooks, if you don't have years and years of experience, especially in each of the products that you want to trade, I wouldn't do it as a novice trader. But when you're experienced, you can do whatever you want. So yeah. Paul Strait says thoughts on copper and platinum. Well, copper we talked about. Let's see what happened in copper. Copper missed my. This is why I hate limit orders. So here's the reason why D doesn't use limit orders, because it missed my bloody entry by like literally 2 ticks. 2 ticks. This kind of stuff, when you're using limit orders, can put you on tilt. But I am going to put an order in like that. And yes, it's a bigger stop loss. Why? Because I meant to enter higher up, and that missed my order. So now I have to account for that. But it's a micro, it's a combine, doesn't matter. No. So yeah, copper pause trade. You can go back to the beginning of this stream, because I'm not going to be repeating everything that I've just said on copper, because I actually did a pretty deep dive into the levels and stuff and everything and what I'm seeing. And I think it wouldn't be very efficient if I just keep repeating it for every single person that joins a little bit late. So please make use of our lovely technologies. Rewind. Maybe run it on like 2 times speed to catch up. And in the meantime, we're going to carry on. Now, platinum, I don't have much thoughts on at the moment. I think platinum is still in a bit of a funk mode. And this is what I mean. So if we look at the daily chart, we had a couple of days of a breakout, and now it's gone back to like really wicky candles, and yet not that much movement, right? So when you look at how this is advancing, is it stair-stepping lower, as we like to say? And that means that if we're going to go either higher or lower, each next candle is creating let's say a high and closing higher from the previous candle close. And if that's not happening, I just see it as painful. If you're going to run swings intraday like I like to run them, this is pretty undesirable price action. You want a little bit more rather than whipping. Because you see these wicks, like this particular wick. Let me see if I can grab a drawing tool somewhere. I think they were here. Maybe a highlighter. So if that's not a very good highlight, is it? So yeah, if I mark off this area, this wick, like what is it? Nothing. It's a range trade, right? It is just a range trade. Nothing more, nothing less. So I don't like seeing that. And then you can look at this entire area as a newly formed range, and until that breaks, is going to be a little bit push-pull. Now, it does depend on where the options are and what gold is doing, because platinum tends to be a little more correlated with gold than some of the other things, but not like 100%. So platinum for me has been, you know, especially when it's doing all of that, just doesn't seem to have more than one good day. And that has not really been, that's been the case since January, really, this year. If we go back to October last year, this is September, here we go. So October last year, this is what it was doing. Beautiful, pushing in the same direction, then turning around, going all the way back the other way, and then just kept doing that. Get stuck a little bit in December, but you know, December is a weird month anyway. And then come January, starts to do these extended periods and days and weeks where it just kind of doesn't do anything for, or you know, it does something, but on an intraday basis, if you're trading this intraday, these wicks either side, they're very tough to manage intraday, okay? Especially if you want to run a swing, because they're uncomfortable, right? You're sitting there, you're waiting for something to happen, and then you get some profit, you get like 35 ticks of profit, you're like, yay, and then it just comes back down. So we'll see whether this state changes. If it does, obviously it's going to be back on tradable instruments. I'm also going to have a look at what the CME C-Vol is, which is kind of like the VIX for platinum. And with platinum, I don't like to trade it when the C-Vol is below 30, really, ideally. Every time I do, it's always like pulling teeth. You keep trying to trade it and it's like, well, not going. Yeah, you see, so it's kind of sitting on the cusp of tradability. Here's platinum. 29.6. Like I said, the 29, you can do a couple of like 35 tick trades here and there, but really this needs to go over 30 for nice smooth movement, extended moves in the same direction, and just to make everybody's lives a little bit easier. So yeah, we need that to change if we're going to trade platinum. So look at all the copper thing. Copper thingy. Okay. So if we're still hanging below the gamma wall, it's a good sign. Trader Can says, I had to ask. I hope you're settled in the new place. Thanks for yesterday. You're very welcome. Yeah, your questions and comments during the Neuro Wednesdays were great. You know, we had a lot of interaction yesterday. I was surprised at how much people were kind of, again, pouring their souls out during the Neuro Wednesday, which is beautiful to see. You know, there's so much toxicity in this industry that we need a little bit of light in here. And Dr. Jerome is so kind, so knowledgeable, and he's a trader, so he can directly help us with whatever we're struggling with, right? We're so lucky to have him. Okay, let's have a look. Hardeep says, D, I'm holding an oil trade from swing last night. Do you think it would go to last week's high? I'm 90 cents in profit, so that is 90 ticks. Just take that, man. Like, what are you doing in 90 ticks in profit and not taking profits? I mean, you know, at some point your trade goes to negative risk reward because you're risking so much. And I mean, why are you also holding it apart? Like right now we're showing weakness at VWAP. So if you're 90 cents in profit, if you're 90 ticks in profit, take it, because what happens with crude oil is that at every new session, it can turn around and just wipe out the entire day. And remember, if you're long, crude oil has a short bias. Like equities have an upward bias. Crude oil, at most times when you look at like many years, it has a short bias. So any longs, if you catch 90 cents out of it, just bloody take it. The way I'm seeing it, you're now risking all of your profits to chase some arbitrary high of day. For what reason? Nothing. Brooksy says long-term platinum chart looks very bullish if the range breaks. Yeah. If the range breaks to the upside, yeah, I would agree with that. But the problem is we have a range at the moment. We can't be imagining what will happen tomorrow, 2 weeks from now. We can only use, this is where people go wrong. They go into conjecture and they're like, well, if it breaks this level and then it reaches a million price point, it's like we don't, that's an unknown. Like you have an equation with two unknowns. Well, I would argue that trading is all of it is unknown apart from one thing. What is the current price? It's the only thing we know, okay? Anything else is conjecture. So what do we have right now? We have a range in platinum. Will it break? Nobody knows. If it breaks, that's a different thing, because that's what's happening at that point. Right now, the range is saying they've reached a point where there's some sort of a price agreement and they ain't moving it higher, okay? Brian wants to know, D, what are your thoughts on high Kanashi candles? If you struggle holding trades and you want to hold trades, you know, if that's your objective, it might be an idea to have a look at high Kanashi on like a 15-minute chart, because it will enable you to filter out a lot of the noise. Because things like NQ, especially, it has a lot of intra-candle noise, as opposed to some of my products that are pretty smooth. You know, even natural gas, like when you look at it, how it moves, right now it's not exactly the right time for that. But if you just look at how it moves intra-candle, it's smooth movement. And yet there's, you know, a little bit of an ebb and flow intra-candle, but it's not like NASDAQ that is completely seizure-inducing. It's like up, down, up, down, up, down, down, up, up, down, down. And because of that, many people find it difficult to hold through any meaningful time frame to get that bigger risk reward if they do catch a runner. Well, I would argue that high Kanashi candles can help with that, but only if that's what you're struggling with. You're trading a fast moving product, it has a lot of intra-candle movement, and you're struggling to hold through all of that because there's a lot of fake outs until it truly decides where it's going to go. So yeah, give them a go. If you don't know what they are, I'm going to show them. I mean, obviously, Brian, you know, but here's what they look like. They literally smooth out any nonsense that you may see intraday, and can even tell you whether there is a trend or not. Like right now, I would say that copper is kind of slowed down. There's no trend. But there was a trend overnight. There definitely was a trend overnight. We started here and then carried on all the way into the London Open. Now, yesterday, here's what that looked like. Very nice, smooth. I got caught in this, going higher because I thought it was a bounce from VWAP. I did manage to catch it towards the end of the day, but yeah, it was a very difficult read though. Maybe if I'd seen the high Kanashi candles, maybe it would have been easier. I don't know. I do have a look at them every so often. It's not like I don't use them, especially if I need to do something other than trading, and I'm, holding a trade for 3-4 hours, which is not unusual for me at all, I will have a look at Heikin-Ashi, sometimes even on a 30-minute chart, and then I would just hold it until it tells me that the trend is gone. But yeah, they're a useful tool for certain things. Not for all, but for people who are struggling to hold trades longer. Freddie Z is asking, how do I learn what a gamma wall is? How do I identify it? Probably best to go to Mentor Q. So I'm going to put that in the chat. I'm not their affiliate or anything like that. I'm friends with Fabio. So, I have done a couple of webinars with him, and Marie has done as well. And it's just one of the very good companies that collates and aggregates very complex data from the options chains and options matrices down to like a single line on the chart. It's brilliant. Back in the day, I used to spend probably about 2 hours trying to figure out where the options are. It's like, oh, is this one stronger than the other one? And they just literally put it down on the chart. They rank it in strength as well, which is absolutely brilliant. And they do have a little academy where you can learn all about what a gamma wall is, why it affects it, what an HVL is, and how to start maybe incorporating all of that into intraday trading. Now, I do trade options every so often, not all the time. So I'm not options are not something I run all the time, but every so often, if I see an opportunity, I will, especially if it swings and stuff, I will rather put in an option than an outright swing trade. And it depends, whether it's going to be like an uncovered call or something, or, there are many, many different ways to take advantage. All right, so copper is still below that gamma wall, which is a good sign. So let's wait for some volume. What's the time? See, we still have at least about 40 minutes before copper does the real move. So I was doing some analysis on it and just kind of going through the last few weeks of how it behaves. And I actually realized that 4 months ago, before tariffs, it used to go into a breakout for London, and then that would hold for the entire day with some minor pullbacks. What's been happening in the last 2 months in particular is that London tries to take it one way and then fakes it out. So that's what we're seeing here now. But yeah. Trading tour, will you plan to draw your possibly stop loss and TP on your chart? What? I always have my stops, especially in active trades, but I'm not going to be giving you trades here, guys. That's your job. This is I can give you levels, I can give you areas that I might look at, but this is not a signals class. I am Series 3 qualified, but I'm not a CTA, I'm not a CPO. So yeah, me kind of trading for you. That's why I work for a prop firm. I trade for myself. So we can talk, we can educate, we can hold your hand through the mental triggers that you might have and help you deal with them. But you have to be the one who decides, what you want to do with the levels. And bear in mind, I'm wrong a lot. I have 43% accuracy. If you take all of the good times, bad times, 18 years worth of data, 43% accuracy. That means that every 3 trades out of the 5, I will lose, right? Or every 6 trades out of the 10, I will lose. So what has a positive expectancy with me is that I'm able to catch these humongously monstrous trades that go for like 300-400 ticks, but they won't happen every single day. They will happen at certain points of the charts when we reach some bigger areas, and I generally know how to recognize those, and that's why I have higher risk rewards, 1.7 to 2.3. Now there are times when I'm smashing it at like 65-70% accuracy, but I'm still maintaining a relatively high risk reward during those times. It might not be 1.7, but it's always like 1.4, 1.5, because at those times when my accuracy kicks up, I'm a more scalpy because the market state calls for it. So yeah, all right. So we're getting a bit of movement here. Hardeep says, I always lose my funded account after payout. That's a belief. That might be based on your previous experience, but it's nothing but a belief. And it is a pattern that you can work on. If you know this about yourself, what are you doing to get ahead of that? Watch Newer Wednesdays yesterday. We actually spoke about that. And I think it's like towards the beginning, somebody asked this very question. Maybe it might have been you. And Jerome gave you this whole way of replacing that, and how, you're not supposed to just believe that that is how it's always going to be, because that is what's actually stopping you from moving forward. So we go back to psychology again. The statement, I always lose my funded account after payout, it's a belief, right? Why? Because you've done it so many times that now you've convinced yourself that that's what you do. Oh, I always lose my account after payout. But let me ask you this. Back in the day, when we didn't have million sim attempts, retries, constant retries, you would get into a prop firm, pay a lot of money to be there. I'm not talking $300. I'm talking thousands and thousands of dollars for an opportunity to someday be given a funded account live. So then you would go in, you would have a bad week or whatever. You would get worried, but you knew that that was your only chance. There were no micros, there was only minis, risk was tight, different sort of ball game altogether. But you knew that if you blew up that account, and the quicker you blew it up, the quicker they would boot you out of the company, right? None of this retry. Like, oh, can I try again? No. Get out. That's how it used to be. So I'm asking you now, if you had that same outlook, that this is the only account that you can ever have, would you still behave the same way? Or would you be getting ahead of your behaviors? You would put a tight risk limit. You would lock up your settings the previous night. Because you don't, or you would call up the risk team, because back then we didn't have such fancy tools. You'd have to call a risk team and go, hey, can you lock me out? It's how it used to be with Topstep as well. Now we have our own control over that, which is brilliant, but not many people use it. It's like, if you have this pattern of blowing up after payout, get ahead of yourself. Block out the big symbols. Put a trade limit on. Put $150 of data loss limit, and then stick to it. Weather the pattern and break the pattern by getting ahead of whatever it is that you're doing, whether it's blowing up on the 5th day before the payout or blowing out 1 day after the payout. It is a pattern, but it is not there forever. You are setting yourself up for failure by believing that it is. We're very malleable. Our brains are malleable. So you can change that, but not without active action and self-awareness. So next time, make a plan. Make a plan. Don't just click buttons and go, Make a plan. Shay Hughes says, you've got to start changing the internal dialogue if it's holding you back. 100% correct. Yeah. Rigoberto is asking, question, I'm new. Can you explain to me why I should try the combine for Topstep over everyone else's? Well, let's talk longevity. First and foremost, never mind other things, but longevity, right? We have been around, I believe, since 2010. So I joined Topstep for the first time in 2015, I believe. And I was their first female funded trader. Didn't know that up until last year when Eddie told me. But yeah, longevity. They know what they're doing. Topstep has been around the longest because Topstep is the pioneer of this industry. All of the other firms that you see now, they came after Topstep and because of Topstep. So where are you going to go? You're going to go to, the new firms, fine, that's your choice. But I'm always worried with newer firms how they will run their business. Now the industry is so competitive. We have things like, so I'm going to take this now because we've got VWAP here and anything can happen. And HVL, usually it bounces when it comes there the first time. So, okay. Anyway, it's a matter of longevity. It's a matter of understanding the business model that you're in. And Topstep has a lot of data. You have some other firms that are like, oh, we're going to undercut everybody now. And then they come up with like really unsustainable models and then we see them blow up. Not to mention the changes of rules. Like I know Topstep has modified some of their rules, but some of the core ones are still there. Like the rules that they modified were mainly relating to payouts because we're getting traders who want to endlessly sim farm and get like, $500,000, $1 million all from sim. Now that part is what's unsustainable for a lot of the firms that are never pushing traders live. This is why you're seeing so many of them go towards the live model. But just be very aware that whilst other firms will push you live, they will not push you live with maximum $150,000 of real money behind you. And I've seen on Twitter that some people doubt that Topstep actually puts that kind of money behind people in the live accounts and that the live accounts are not real. The live accounts are real. You can see it. I've shown that before many times where I placed an order on the dome and it showed up. So I'm not going to be doing that again, mainly because I'm on a laptop and stuff and I can't be bothered today. But they genuinely take their money from all of their revenue streams and they will put the biggest amount of cash in the live account once you get to that point. Some people are having problems with capped payouts. Can I just remind everyone that XFAs are a demo? Like, I kind of feel like I walked into some weird Twilight Zone where you can now get paid out from a demo account. And it's like, what? And now people are complaining that it's not enough. They want millions out of it because it's like gravy and it's way too good to be true. There's signs in the industry as well that the regulators are not happy about this and that if they step in, like Michael Patak was talking about SRO. Many people are not for it. But if the real regulators step in, do you really think you're going to be able to get a payout from a demo account? That's going to go away, okay? So those of you who are against SRO, and we have it good right now. So I'm just going to say, be careful what you wish for. I say that regulation is required to a degree, but if you get the real regulators, they're not going to let you take money out of a demo account. It's like, what? WTF, right? So just tread lightly. But if you're choosing firms, be careful of firms that have things like endless live accounts or endless sim funded or, read the fine print. They all have like this, like either a consistency rule or the rules keep changing or, one of the other issues. But longevity is a big thing, right? If they've been around for a few years, they usually know what they're doing. You can love them, you can hate them, but the firm has managed to survive all this time and in many cases thrive as well. Now, I'm not going to tell you to go with Topstep or this or that. That is up to you. Just be aware of the newer firms. That's all I'm going to say. Because you need that proof that they know what they're doing, that the math is mathing. Otherwise, a lot of the firms have dollars in their eyes, kind of like new traders that step into this to get rich quick. Well, a lot of the unscrupulous players in the industry, they stepped in to do the same. And then they blow up. And then all the customers that have paid money, that were, trusting in them, that bought challenges, they worked in their accounts, they're left with nothing, okay? Longevity, number one thing you need to look at in a firm, okay? SRO is a self-regulatory organization. And in case you didn't know that, CFTC and NFA, which is official government, official regulatory bodies, they're also SROs. Go figure. Diversity says, should I buy a Topstep account if I don't know how to trade at all? If you're so new that you never even placed one trade, you don't need to sign up for anything more than a practice account. Do you need to know about risk limits and everything? Yes, it's actually a good way to enter the industry, because you will understand very quickly that full porting it and just putting on random sizes, no stop losses, just winging it is not the way to trade. So from that point of view, a practice account is all that's needed. But you can do that with any demo account. It doesn't need to be Topstep. However, once you get to a point where you sort of know what you're doing, not like fully, but you're not completely incompetent, and you get to a point where you know what order types are, you know how to place a stop loss, you have an idea of strategy. At that point, yes, signing up for a combine is a great starting point, because it will teach you discipline and teach you consequences of suspect trading habits by effectively limiting the amount of equity that you have, or blowing up all of your equity. Very quickly you're going to learn as a novice that there's some risk models to think about and control, and downside risk management is a big thing. Many people struggle with it. I mean, hell, even I struggle with it every so often after 18 years, so it never really goes away. Rick says, how many strategies did you change before you got to your style of trading? Not many. To me, my trading strategies were always based on some sort of institutional order flow, because I was lucky enough to have a friend who was, he was a prop trader, and he worked for an investment bank before then didn't enjoy the corporate environment that much, and went into prop trading, which was a lot more relaxed. And he was the one who taught me supply and demand right away. Concept of risk versus reward, concept of using, a low account balance of per trade on a per trade basis. So not using 50% of your account balance, but using like 1%. And actually on my bigger account, I only use like 0.3%. Not applicable for this, because I use up to 4%, sometimes even 10% per position size. It's a prop account. I can be more aggressive because the risk is mitigated. But yeah, for me, it was more an evolution. Started with one thing, added the quantitative extremes for better timing intraday, then went into intraday, added volume profile and market profile, and then eventually, when the options started taking hold, added some options activity. So it was never like, oh, I traded this, it's really not working, let's throw out the baby with the bathwater and start all over again. To me, it was all like, okay, this has worked for a while, let's see how we can improve it. And I've always been somebody who journals a lot. I'm such a nerd that it's unbelievable. Because markets intrigue me, if not for anything else but the psychological perspective that it elicits in us. Can you explain how to read the DOM on the right of your screen? There. Okay, so I do have bookmap on the other screen that collates and aggregates this and time and sales. Now, to me, DOM and time and sales are part of the same picture. Here you see resting orders, here you see real-time orders, okay? And then the final piece of that puzzle is what's happened previously just using a plain candlestick chart a little bit further away than the DOM can reach. So for example, looking at market structure, this is where I start. This is your low, that's your high. Reasonable to assume that there's some sort of a demand here and there's some sort of a supply here. So that's how I start. I don't start on the time and sales and going, what is going on? Because I wouldn't have context. So we need to have context. Where are we in the chart location and what do we assume should happen there? So if you assume that there were buyers here, sellers here, what do we assume is going to happen? That buyers might step in here at least for the first time when we reach the area of, let's say, sub 467. And that sellers will appear once we're above 472.65. Now, at any point, that can change. This could be a new breakout. We could go higher, but in that case, I've got the initial balance as a reference and a whole bunch of other things. Let's go back to the DOM. Once we reach this area, we can then look to see whether there are any imbalances. And I'm talking major imbalances. Like when you see them, they're kind of like sticky outy areas. I'm just gonna scan through some of them to see whether we got any. Here we go. Okay, so natural gas. We have 80 contracts, really sticky outy, right? You can see it. Look at it. It's kind of like, hello, hi, I'm over here, come get me. So that's how I look at those orders, right? They will get hunted. The bigger the imbalance, especially on some of the commodities, the bigger the chance that the price is going to go there first. So what some of us are doing, like let's say you have a failed auction of some sort and you see that, that's a good sign. It means that your trade will at least go to 354.3. In fact, this is a combine. We can speculate that, and that can be like a little scalp, It can be a little scalp. Now, I am going to go on natural gas because this is a small account, so. Okay. So what I'm going to do here is I'm going to market sell 3. And I'm also going to go to the time and sales and then set my profit at 543. So 10 ticks, right? And it doesn't mean that it's going to go there right away, but at some point, if they still stay, it's going to get hunted. Now I'm using a full contract. Okay, so now they're chasing, but they're still there. I just saw somebody trying to chase. Anytime you see those big orders somewhere around there, they're like, I should go up. Oh no. But 79 at 3.543, still there. We're getting some selling coming in on time and sales. Now, time and sales, DOM, order flow, it is a lot more discretionary and more difficult to put into a flow chart, into a flow diagram, than some of the other concepts. It requires an inordinate amount of screen time to start making sense of the patterns you're seeing. And now if this changes, if I get a big order to the upside, obviously that would be an invalidation of this little scalp idea, and I would have to exit, okay? There is a stop loss here, 16 ticks, nothing major. But what we're waiting for, we're now just waiting for the initiation of paper getting filled, effectively just to go down to 3543 to hunt liquidity. That's all we're doing. Ramazzotti says, I see no histogram on my dome. It's because you don't have level 2 data. It is a paid for service. It is, remind me, Bruno, how much is level 2 data these days? Because that just comes through. I can't be bothered to. I look different today. Yesterday I had to take a lot of meds because I had a reaction to something and it blew up my face. So yeah, today I look a little normal. So my puffiness that I had yesterday has decreased. Thank you for noticing. $39. There we go. Lupek, thanks so much. So yeah, Ramazzotti for $39 a month. You get level 2 data. Does everybody need it? Probably not, especially not if you're not an order flow trader or you're not really interested in level 2. For me, it was just another layer to get a little bit more data around what was going on. But that's how I use it, you know, fairly simple. You effectively try to find inefficiencies and order blocks. Like I would argue that this 11, 10, 13, 15, that this is an entire order block that might be a little hard to break unless we get somebody with a really big order. And right now, I'm not seeing any big players here. Like the biggest guy is 5 lots. And to really get all of this, we would need the order that is equivalent to the size here on the buy side. And then he would eat all of that up. Sometimes if the run up to the level, to the order block is pretty aggressive, you will see these guys bailing. And they're like, whoop, don't want to be in front of that. And then on Bookmap, it just shows up as disappearing orders. It just visualizes things a little bit better. K2 Rim says, thank you, Deeyana. I appreciate your energy a lot. You're very welcome. All right. Here they are. Hunt it, take it. But yeah, some sellers. 343. We've not disappeared. Oh, what do we do now? What do we do now? So now they've disappeared, right? And I'm going to disappear too. Okay? Why? Because I was banking on 3543 still being there. For some reason, they decided to pull the order. Is it spoofing? Maybe. But if they disappear, so obviously I don't ever wanted to scalp down to 3543. They decided to pull it. Who am I to keep holding the order there going, oh, please come back. Please come back. Why aren't you back? Please. They're not there anymore. So I got, 3 ticks, scalp. And in fact, when I briefly worked for a market making company, that's exactly the stuff they were doing. So you're effectively looking for inefficiencies and trying to kind of hunt for a little paper on the dome. But right now, natural gas, not really good enough. There's no huge imbalances. Let's have a look at GC. I do this on full contracts, don't do this on micros, because micros generally have like weirdness. The amount of times that I was trading MGC and I would see like 243 orders sitting higher up, and it means nothing because it's a micro. It's just somebody running an algo and they're like, we always want to have some orders up here, so just in case something moves very quickly. Looking at crude oil, no, nothing there. Oh, okay. Crude oil 62.25. 83 orders. Although on crude oil, for these sort of imbalances, I want to see more like 110. So yeah, it's just like a different way of looking at the market. Personally, I don't scalp the way I've just done. I don't like doing that. But I will use this information to give me a more educated view of what is actually happening in the markets. So hopefully that helps to get you to understand a little bit better what the dome and real-time order flow can do for you. But you know, at the end of the day, market profile is order flow as well. You know, it's orders that were flowing and they're thereby left the distribution curves at a particular spot. They spend time in one area. You know, you have thinner parts of the profile that should be looked at as potential opportunities. Many, many different ways, but it's all order flow. We're all looking at very, very similar things. Marcus is asking, did they just move orders higher up? Like order flow is dynamic, so sometimes they might move them, sometimes they flip direction, and then you will see that same big order on the other side, which is a little unusual. Usually what tends to happen is if they get a move against them, they might move it with the direction of the market. So it's like they haven't been filled yet, but they still want to be filled, and then you see them chase, which is quite funny. It's like, yeah, so you also suffer from FOMO. Okay. But most of the time, you would just see them at one point, and then they will either keep it there or they would disappear. Now, at this time of day on natural gas, to be fair, there's a bit of spoofing going on because they're like, yeah, let's just mess around. Is it illegal? Yes, but extraordinarily hard to prove that you're spoofing and that you don't have a true desire to fill that order. You can just go, well, I've changed my mind now. How are they going to prove that? Vladimir says, this is hands down not what I expected. Usually stream like this less alpha. Your EMO vol stream, this explanation before work. Okay, thank you. Is the big buy limit order a bearish signal or a bullish one? Does it act as a magnet? Anytime you see a big limit order, it will more often just act as a magnet. What happens after is anyone's guess. This is where you need context from other concepts, I suppose. And then also what your intention is. Do you want to run a small scalp? Which I'm not a fan of after 18 years. Like I want something that I can run. It's almost like watching paint dry and still making money. That is where I'm at this point of my career. You know, something that moves smoothly, not too fast. Granny D over here, you know, I will be 45 in December, so I'm not the youngest, and my brain doesn't quite work as it used to, even though, you know, it's still fairly useful. But for me, I want to run swings. So when I see something like that happening, like having a big order, I want it to be to my direction. So I don't want to see it happening against my trade. So if I enter a trade and I immediately see something like that against me, that will make me get out of a trade. Because first of all, you know you're going to get, the paper will get filled, right? So they will hunt that. And where I'm at, you know, with my trade, let's say this current time, I'm going to be in drawdown when that happens. So it's better to just exit, take a small hit, and then readjust once the paper has been filled effectively, once they hunted that, once that acted as a magnet. Now, does that change microstructure? I will still, let's say I'm trying to short and we go up to fill those big orders, the big limit orders. And then, well, what are they doing there? Are we still having a higher high? You know, do we have a high that's a reference and therefore it's a supply that we can short from still? Or have they broken the high? And now I have to flip because I'm like, well, I don't have the high anymore. Now it's a higher high. So, you know, all sorts of ways. So let's illustrate that on this particular chart. So I have a reference at 473.80. So I was going short, and let's say I wanted to go short again. So let's have a look at full copper. Not too much going on there, but also let's say, hypothetically, I entered another short at 70.55, but then I notice there's like 43 orders sitting up at 73.90. So what does that do? So all the way up past the previous high. What does that do for the market structure that I was looking at and basing my short trade on that idea? it means that at the very least, they're going to do a stop run and maybe, just maybe, go into a value acceptance. That changes things. This is what situational awareness means. Being aware of the events that break the market structure that you were looking at previously, and then your job is to stay objective enough to be able to see that and not marry your trade. Not marry the direction of the trade that you're in, but at the same time not flip-flop and, flip and flop long short like a fish out of water, but also have a very decent idea of when the next direction might be valid for you. It's a tough skill, right? Very tough. Staying objective. You have emotions. It's money. Money is emotional for a lot of people. And it's like, and now I have to be objective. What? NDB says, thank you, D. Wondering what you use the copy trading for. What would you use the copy trading for? For me, I used it for scaling up some capital, but that was only in recent years. I only use it to mainly control the risk, to partial the risk in the beginning stages of any XFAs, because the end result is that all of it gets transferred into the live account, which you should learn how to manage on its own as well. Just having, 5 accounts and then staring at a maximum 1 or 2 lots in each of them, when you put math on your side, it's the same equation, with the added difficulty that the risk team will probably not going to allow you to have 15,000 worth of daily loss limit. So they will keep it at 3 until you prove yourself in the live account. So you're kind of starting the next level of your development, where you have to effectively size down and prove that you can manage things in the live environment, where there's no resets, there's no try again. If you blow it up, you blow it up. Yes, you can try again, but then you have to get more combines. It's kind of a good thing and a bad thing. But in the grand scheme of things, once you get to a point where, let's say you are undercapitalized, and you're saying things like, well, one XFA, it's all very well. I've taken 5 payouts. I've managed to hold on to the XFA for 3 months. Now it's time to scale up. Like, I'm talking about novice traders who have never gotten to that point, right? If you're struggling to pass the combine, you're not there yet. You still need some work before you can get there. But if you've taken a payout, like if you've taken 3 or 4 payouts out of the same XFA, that tells you something about your skill set. It tells you that suddenly you can hold a trade past the 2 or 3 or 4 or 5 days. That is the norm for people to do. Unfortunately, this is what we're trying to change. We're trying to educate people. We're trying to level up everybody's skills so that we can make cash for everyone, right? Cash for the company. And what is the point of scaling up? Well, you get the opportunity to trade with a little bit more size and therefore to have your resources, but not before you're ready. If you are copy trading before you're ready, all that you're going to do there is increase your upfront costs. The whole point of going to a prop firm is to mitigate risk to your own savings, not to suddenly start spending thousands and thousands on combines a month and resets and XFAs and activation fees and everything. Like, what is the point? Just start with 1. Start with 2, maybe 2. Just don't go, dollars in your eyes, get 5, pass it in 2 days, blow it up in another 2 days. Gets out of control pretty quickly. So once you get to a point where you can hold on to the XFA, that's the time to maybe utilize copy trading. But even now, I don't like more than 3. It's like, I just don't see the point, because the transition from 5 accounts down to 1, that's inevitably going to happen at Topstep for you. It's a harder adjustment than going from like 2 or 3 to 1 live. It's a harder adjustment because you have a bigger leash to hang yourself with 5 XFAs, and then suddenly they put a pretty tight leash on you. It's like, well, now you just have 3K until you can prove yourself. Because let's be honest, many people blow up in the live after like a week, a month. Why? Because it's like, it's so stressful. Now there's no going back, and now it's live money. It's a bit different. Execution, not the same. Not the same. Try run 15 NQ contracts during low liquidity times, and we've heard people going, it's not filling me. It's like, yeah, because look at the ladder. There's not enough orders. And they're like, what do you mean there's not enough orders? When I was in the XFA, I'm like, XFA is a demo. There's no slippage. I mean, there is slippage, simulated slippage, but it's a different ball game. Like, suddenly you have to start looking at what NQ is doing on the ladder. It's like, is there liquidity? And look at it now. 1, 2. So imagine somebody trying to run a 15 lot here in the live market. Two things would happen. We're retail traders. We don't have preferential fills with the clearinghouse, right? So what happens is that they put you on the back of the queue, the larger the order. And the guys that are going to get filled is going to be 1 and 2 guys, because that's where liquidity is. Until your turn comes, the order will just sit there. And then it depends how the platform is set up. Sometimes you have partial fills, so it will fill one at one price, then it goes a little bit to a different price, then it fills another 2. Some platforms have the fill or kill, where it will either fill all of it or none, and then there's just not going to be an order there. But generally, retail is at the back of the queue when it comes to filling larger orders. You can fill small orders, no problem. You're at the front of the queue, standing there, getting your coffee. But the larger orders will take time. And that's what people have a problem with. They're like, Topstep. And I'm like, it's not Topstep. I'm sorry to burst your bubble. It's not Topstep. It's just how the exchange works. And, if you don't know that, frankly, in my eyes, you're not a real trader. If you've never experienced execution problems due to not enough liquidity and having to work your way around it. And, when I traded like with one firm, they were pushing size. And I remember trying to fill 120 lot order in crude oil. Now, even now, okay, crude oil is a little bit thinner than it used to be, but even now it's like 13.78. You can't fill all 120 lots at one price. It's just not happening. So what we were doing, we were filling a little bit at one price. So for example, if there's 30 on the other side, you would maybe fill 4 or 5, maybe 10, and then you would do the same thing, 5 or 6, and another, and keep going until the whole order is filled. There's no like scalps. It's like, if you have to dick around with executions like that, you need to work around the zone. You're filling the order in a zone. That's why looking at every price point, not as a singular price point, but as a zone, is much better if you're going to ever trade with size. No, I'm not saying it's necessary, because people make ludicrously good money trading between 3 and 5 lots. You don't need more. But it's just for those of us who have been in the industry long enough to experience the pain of having to execute a large order. That was, Lunatic Pennies is saying, Dee, good morning, when are you going to bring Tom Hugard live to the show? Tom Hugard doesn't like prop firms that are online, even though he trades CFDs, so I don't know how that's different, but never mind. But yeah, I think they asked him, and he was not in favor, so at the moment, I don't think Tom is going to be coming on. He might change his mind at some point, if we get bigger and bigger and bigger. Maybe he would change his tune, but right now he's not in favor of prop firms. Again, he probably comes from a little bit more old school thing like me, where, I saw the value of prop firms purely because I liked the way Chicago did things. And when I came back to London, I wanted a firm that is Chicago-based prop company, but remote. And that's how I found Topstep. Anyways, let's finish it up here. So we did a couple of trades here, talked about quite a few concepts. Let's see what the day brings. What do we have for news today? I think we have a couple of big things this week. So we have unemployment claims today. For copper, there's probably not going to be that big of a mover. Preliminary GDP. Now that could be a big mover, and it's all coming out at the same time. 1:30 p.m. right at COMEX Open. And then tomorrow, I might be on the main broadcast, but I'm not doing London streams. Core PC price index. Yeah, that could be a mover as well. All right. So, should be an interesting day. Control your risk. And, did I miss something here? Suddenly realize the chat has gone. Trading Nichols has a lot to say. Let's see. Hold on, I love your comments usually. As you mentioned, smooth moves. I've done very well on NKD and Asia last night. Great. Not very liquid, but occasionally its price action makes a lot of sense to me. I agree. I actually like doing Nikkei trades whenever we have like a big liquidation day. And then usually it goes into mean reversion. Typically, those will happen after like FOMC. We did have the minutes last night, so to me, it wasn't a big enough move to warrant an NKD trade because I have to like not sleep because I have to be awake from obviously my midnight up to about 4 a.m., 5 a.m. And yesterday I had a raging migraine and I ate something that reacted with my whole body, and for some reason I got a headache out of it. I don't really suffer from headaches, but yeah, that was a bit weird. Trading Nichols says, did too much on Memorial Day, so I've been sleeping more in the hours of study and trading. The earliest I've been up all week. Yep. I've been waking up at like 7 a.m. in this place. There's so much light in this house. Not in this room. This room is nice and dark. But the rest of the house. One day I'm going to do a stream from my kitchen, but I'm waiting for a new sofa to arrive first, so it might be a couple of months. Marcus says, if I see there are no orders at a price, then I'll put one in. I'm the first one in queue, and I will remain first. No, so it always works with order matching. Is there anyone on the other side? So it's not who's on your side. It's who's on the opposite side to you, because they have to, like, remember, order matching works as counterparty. So for every order, there must be a counter order. And if you're the only one there, you need to wait until there's somebody on the other side also interested in that price to fill you. Now, these markets that we trade, they're pretty liquid, so you shouldn't have those issues unless you're trading something that is really odd. And I've been known to trade odd products. But even I haven't really noticed, many liquidity problems with like 1 or 2 lots. Trading Nichols says, Deeyana, you make me laugh. When someone was looking at a top and trying to call it during Coach Ray's class, my comment was I have less interest with huge extension plays since about 4 years ago. Yeah, I agree with that. Okay, last question. Abdu wants to know, Deeyana, do you agree that at prop firms we buy only the MLL of 3K, not the account balance of 50K? Well, yes, you're buying nominal account value that you would need to trade a real brokerage account. But at the same time, they're not going to allow you to lose 50K of their own money until you prove yourself to them. It's a trust-based game. But think about this. They're allowing you to trade up to 5 NQs on a 50K account. Why 50K? Because look at the leverage and the margin requirements required to trade 5 NQs on AMP futures, for example. In fact, let's have a look. And for those of you who are like, oh yeah, but intraday, you only need 1,000. Yeah, that's the maintenance margin. That's not the initial margin. Okay, let's have a look. NASDAQ, here it is. Maintenance margin This is per contract, by the way. You need to have, per contract, you need to have 35,714. So it's 35 grand per 1 NQ. This day trading thing is just how much you need to have to open a day trade, but that is not what you need to put up first to be able to trade with the size. So it actually should be even bigger, right? It should be bigger. But people go, oh, but we're only trading. Like, do you think AMP is going to allow you to open up, 5 NQs if you only have 2 grand in your account? Like, dream on, man. That's why they're called 50K, 100K, 150K. It's based on the margin requirement that you would need. And it's gone worse. It used to be like 10, 20K for margin, but we've still kept those old. I mean, imagine if you're calling 50K account, like 35 times, let's do a quick calculation here. So 35 times 5, you would have to call to trade 5 NQs if we're going to go by the maintenance, right? You would have to call it 175K account, And of course, they're not going to give you 50K. They're going to give you a tight risk limit. It's like, prove yourself you can keep 2 grand first, and then we can open up the purse strings. But the more you trade sustainably, the more they trust in you. Like you've seen, I went from the first live back to XFA. And then in a month and a half, I'm back in live. Why? Because trust, it's a matter of trust. Anyways, that's it. Thank you so much for being here with me. I have no idea what my schedule is today, because yesterday I was on fast market, so that was nice. But yeah, you might see me, you might not see me. But anyways, I will see you again on Monday for another episode of the Euro Trade. In the meantime, behave yourself. Don't do anything stupid. And try to do exercise if you're struggling with emotions. Do your breathing, do your posture adjustment as Jerome likes to teach us. And more importantly, use these risk tools, right? Don't let yourself get ahead of the game. Or get ahead of yourself more than anything by blowing up more than you should be blowing up in any single day or in any single trade. That's it. This is the Euro Trade. I'm Marcus Dokady. I will see you very soon. Enjoy the rest of your day.